Hello guys, I am here in back and finally ready to do journal entries, and we are going to start where we always start with equity equals assets minus liabilities, minus plus plus minus minus plus. Write that for every question. It just makes life so much easier, and if you don't know what that means, go check out one of the older videos. So I think when you're studying for exam, there's like this general, we gain hope and gain hope and gain hope, and then there comes a point where all hope of passing just like crash plunges, and I feel a little bit like I'm over here at the moment, because this is the third time I'm trying to make this video, and it's just not working, which is ridiculous. I wish somebody with more IT skills could just record the stuff for me. Anyways, eventually we push through to there and we pass, and then life is good. So, one of my motivations for doing this video is that I now have 1,000 subscribers, which is completely insane. I cannot believe that there's 1,000 people that want me to tutor them. I love that. Thank you so much. I really appreciate it. I really, really do. I'm even thinking I can start doing stats maybe, or what, decision analysis or whatever it's called. Anyways, let's get you through accounting. Okay, so we are doing a TUT letter that's marked over there. It's journal entries, and this is what the general journal looks like. We have date details, folio that you'll never use, debits and credits. Then we have our fancy new word list that we're going to use just now. So what you will get in your exam paper probably is the pre-adjusted trial balance. And they give you lots of stuff that hasn't been recorded in the trial balance. And then the first bit of the question says, prepare the journal entries to record the adjustments above. Okay, prepare the journal entries. So if they want you to prepare journal entries, you do that. And then you can do the journal entry. So the very first one says, packaging material on hand at the end of the year to the value of 980 Rand. Packaging material on hand, 980. The general journal, you'll always write the debit first, then you'll have a little tab, open space over there, and then you'll write the credit, and you'll have the amount on this side, which in this case will be 980 and 980, and then you'll have a little description of why you did what you did. So this description over here will be packaging material on hand as at 31 December. What we want to figure out is, what do we debit and what do we credit? Now in this question, they are saying that it is packaging material that's on hand, which means that packaging material generally is an expense. So it'll fall over here on this side as an expense, packaging material. But there's some of it that you actually didn't use. So it's still in the storeroom somewhere, and you need to write in your books, listen guys, we still have packaging material. So we need to up the expense, if that makes any sense. We need to write it on that side to show that we've spent less than we actually thought we did. So on the credit side, we're going to have packaging material. Packaging material. That is so that the expense in our books is this packaging material that they give us, 4,700, minus this 980. That is the actual expense of packaging material. What do we do with the packaging material that's still in the storeroom? We create an asset for it. We write it over here. Inventory. No, inventory. Inventory. I always get so confused with that word. Inventory, packaging material. Okay, so our debit is inventory, packaging material, 980. Credit, you don't even have to write credit. You just write packaging material and you write it on the credit column. In the credit column, and then you write here packaging material on hand as at 31 December 21, and that's our first journal entry. With the journal entries, we are going to refer to our fancy new word list quite often. This really helps. In fact, we're going to use it now with the second question. So the second question says, the long-term borrowings was entered into on 1 October 21. Long-term borrowings, so let's go find that one. It's here at the top somewhere. Long-term borrowings being limited, 25,000 Rand. 25,000 Rand. And it was entered into on 1 October 21. So now you have to check the date. Now is 31 December. So there was October, November, December, 3 months. Just remember 3 months. Then they say, according to the agreement, interest is payable biannually. Biannually means twice a year, at a rate of 18%. So there's, let's say, here's your year. You're going to pay twice. You're going to pay over there. You're going to pay over there. But we've only gone past 3 months now, so we haven't paid anything. But we have to accrue for this year's stuff in this year. So we're going to work out the interest of this one, which is 18%. So you can say 18 divided by 100, or you can say 0.018 or 18 with that percent thing on your calculator, and then you get the total interest on this loan. We only need to record 3 months of it because it's October, November, December. So we take the total, we divide it by 12 to get a per month interest, and then we times it by 3. So the total you get there divided by 12 times 3. And that amount is the interest that, even though you haven't paid it yet, you have borrowed that money, it's accrued. So interest paid, and we were supposed to have paid interest, which is over there, and it is an expense, so I think it comes on this side. Interest on loan. Because we were supposed to have paid it, and that amount we worked out is 1125. Just test it on your calculator to make sure you get that. Now, what are we going to write for the credit account? Because we have to write something in the credit column. And this is where our fancy word lists pop up. Interest payable is an expense. We haven't paid it yet, so it can't be prepaid. So here, accrued expense. And then we write a little description here. Interest that still needs to be paid on long-term borrowings, or interest on loans still payable. Great, that's another mark. Let's do another one. Right, number 3. 2.3. Advertisements include an amount of 400 Rand paid for January 22. So you go look at your date, end of the year 31 December 21. You've paid advertising, and it includes an amount of 400 Rand paid for January. So let's go up to advertising. Over here in the trial balance is 2,000 Rand. But we haven't really spent 2,000 Rand on advertising this year, because 400 Rand of that is only for next year. So the expense of 2,000 we have to make less. So the expense would have been on that side, but now we want to make it less with 400, so we're going to go that side. So on the credit side, we have advertising. And they give us the amount, it's 400. And we have to debit something, because there's a credit and a debit, it's always 2 legs. We are definitely not talking about income, so on the fancy word list, have we paid it all yet already? Yes, advertisement include an amount of that paid for January. Yes, we've paid it already. Prepaid expense. And then the description, you can waffle a little bit over there. The correct answer is advertisements paid in advance. Advertisements paid in advance. Cool. I think we can do another one. .4. Rental income includes an amount in respect of January. Rental income. So now we're talking about income again. Rent can be an expense or an income, depending on how they phrase it. Because you could have a building that you're letting out, or you could be actually renting one of someone else's building. Rental income includes an amount in respect of Jan. So we go up here to rental income in the trial balance. The amount is 15,600. Now we have to make an assumption. The question is very ambiguous. It doesn't tell us that the rental income is for 13 months. It just says that it includes an amount for Jan. So if you want, you just make a little star and you say, I assume 13 months was paid. But how we're going to calculate this is we're going to take that divided by 13, so we get a per month. times it by 12 just to get it for 1 year. No, we want the one amount. We don't want the full year's amount, we want the one amount. So we say divided by 13. Rental includes an amount for Jan. And that'll give us 13 pieces. So that'll give us the amount that was paid for Jan that wasn't supposed to be. Not paid. Wow, I'm getting confused, guys. 2.4 says rental income includes an amount in respect of January. So in January, there was rental income received for January. It's received in this year. It's meant for January. So rental income, which is over there on the side, must be less. And that amount is 1,200. It's just the rental income they give us of 15,600 divided by 13. And then the other one is one of these two. We have received it in advance, so we go for option 3. Income received in advance. Rental income for January received in advance. Rent received in advance or something like that. Great, guys, there's another mark. Okay, I'm going to quit the video here and follow with the next one. What will help you a lot is if you can memorize the fancy new word list, because that makes the adjustments so much easier to do. Okay, good luck.